Hey, what's happening, everybody? Happy Sunday. Thanks for tuning in. This one's going to be pretty interesting. We're going to cover the markets. To kind of start off, we're going to cover the Bitcoin technical analysis, kind of where we may or may not be headed. But the more interesting part to me is kind of how do you sort of hedge yourself in a market like this where we don't know for sure, are we going up or are we going down? Anybody who tells you they know for sure where it's going, they're just lying to you. Um, so with that said, especially in this bearish trend that we've been in, how can we sort of protect ourselves? And how do you do that in a more traditional, more established market, kind of like maybe the stock market, for example? Basically what most investors do is they invest in index funds. And that's why a lot of people are very excited about the ETFs coming out with Bitcoin. They've not been approved yet. So don't get the wrong idea there. But if and when they do get approved, that'll be kind of a big catalyst to the market, a lot of people think. But I think that we can kind of already start kind of hedging ourselves and crafting a more sort of professional index-based portfolio within crypto. And kind of the way you do that is, and the reason you do that is because, especially in the stock market, over the past 10 years, we've been on this crazy bull run and the longest bull run in history. And it's very difficult to outperform those index funds, say the S&P 500. And the reason for that is they get rebalanced and they have their allocation set in stone. And the nice thing is there's already a lot of crypto index funds out on the market, and we can kind of look to mimic those index funds and craft your own personal portfolio based on those index funds. And you can swap in and out and kind of, we'll explain that a little later, but let's get into the Bitcoin chart. Obviously here we're seeing kind of stagnant, sitting around 66.15. Not a lot of movement today. So we'll start off with that. This is kind of a chart that I've been looking at for a little while here. And as you can see, we have this descending triangle here. Pretty evident. And one thing we can go into is look at this. This is the Elliott Wave Forecast.com. I mean, you guys don't have to use this website. There's tons of Elliott Wave theory websites out there. But basically what I see here is this WXY. It's a WXYXZ pattern is what I'm sort of looking at this as. And you guys can comment on this in the comments and let me know if you guys see an alternate count or something different. But kind of the way I'm looking at this is we have our ABC wave down here. Then we have an impulsive 1, 2, 3, 4, 5 wave coming up to form this X. Then we have another ABC down to the Y. And then we have this ABC up to the X again. And then I'm looking for this A, this B to kind of come up, maybe test this resistance line once again, and then maybe have another leg down on this Z leg. Now, what I'm looking at here and kind of the way that we can kind of derive this chart is basically using the Elliott wave theory. And there's a lot of different counts that you can come up with. This is just one that I'm kind of looking at. Let's see. So it says a combination of 3 consecutive structures labeled as W, X, Y, X, Z. Wave W, wave Y, and wave Z subdivisions can be zigzag, flat, double 3 or of smaller degree, or triple 3 of smaller degree. So what we're looking at here, and then it says wave X can be any corrective structure. And so the way I'm looking at this is I see this ABC on the wave way down with this W, and you can dig into the smaller time frames and make sure that this makes sense. And to me, for the most part, it makes sense. That's kind of what I'm rolling with here. And then it says wave X can be any corrective structure, as you can see there. So I label this as the 1, the 2, the 3, the 4, the 5. And remember, this on the daily, so you can go down and you can definitely get to these counts on a more micro scale. So I recommend doing so and kind of double checking this. And then we have our X wave or our Y wave down, which I label as an ABC. And then we have our X can be any corrective structure ABC. And then I'm looking for this ABC leg down for this Z. So that's kind of what I'm looking at. And I have this visual volume represented. And the way I like to do this, I was talking to a couple people about this, is I start this chart pattern, right, first. And then I derive the sort of Elliott wave fundamentals, the theory. And then I'll start the chart at wherever the start of the pattern starts. And then I'll use this visual volume, the VPVR, And this line here gives you the visual volume profile of either support or resistance. So this is where the most volume has come in over the duration of this pattern. And it's been something like 90 days, I believe. Let's go to it. Yeah, like 94, 95 days. And so you can see that there's been some serious volume, some serious support, and or resistance if you're below it, in this zone. And so to me, that's kind of where I could see this Z wave ending and this C as well. I could see us kind of stopping out there. If we break through that, then it becomes a little bit more difficult. And by all means, it's completely possible that this Z shoots through down here. And I think down in this zone is more or less a support zone, especially this bottom line at 58.58, which is a previous support from months and months past. So as we can see, as you move this chart around, you'll see the visual volume move around as well. And we can kind of zone in there. So as you can see, there probably over the course of this entire duration, there's definitely some resistance at this 6,800 mark, 6,850, somewhere in that range, 6,830. And you can see that it's topped out here on this A wave a couple times. It topped out here. It topped out here. And that's a good indication of kind of where this support and resistance is based on volume. And that's a good thing. So when you look back in time, once again, if we break through this area, there's a ton of volume, so it should be a ton of support right around this 6,400. If we break through, there's a big drop off down to this 5,800 mark. So there's not a ton of support or market acceptance in this zone. And same goes for if we break above this descending triangle here, then that kind of diminishes this count. And then we end up kind of going above into this sort of, I wouldn't say no man's land, because there definitely is going to be resistance coming up, but there's a lot less volume support in the next level. And that's kind of what I'm looking at here. So that's just kind of one of the tools I like to use. So the moral of the story is I'm kind of looking for us to take one more kind of leg down and then hopefully break through. We're definitely getting towards this apex. The volume is definitely declining, which is what you would expect in some like these descending triangles. So this is something that we'll kind of have to play the wait and see approach. And if we break down, which generally speaking is what happens, hopefully we'll find some support around 5,800 or so. And if we break up, then we'll kind of have to see if it's a fake out or not. So kind of playing it by ear there. So with the uncertainty in Bitcoin and in the market, this sort of bear market that we've been in for about a year, like 290 days or something like that, what do you do to kind of protect your funds? Or if you're just getting into crypto, it's actually a pretty decent time to just be joining if you're just joining us. How do you kind of protect yourself without having to do a whole ton of research is, to me, it looks like something like this, the Coinbase index. It at its all-time high, it reached 8,000 something, 8,082, which is pretty interesting. So this is their index fund, and what they do, I mean, this is only offered to accredited investors. You have to have a minimum of 250K to invest. But the nice thing is they show you their current composition. And what you can do here is they're heavily weighted in Bitcoin. So if you want to create your own index, your own personal portfolio, you can look to these big companies like Coinbase, or I believe the other one is I think it's Bitwise has one. There's tons and tons of companies doing index funds. And you can just do a Google search for crypto index funds, and you can get their compositions, and you can kind of start to craft your own index. And the nice thing is, if you look over time, just look at the growth that you've seen. And this, like looking at this chart, if you didn't know it was crypto, you would say, oh, that's a normal correction, right? Like you had this super massive bull run and you're correcting a little bit. But when you look at the Bitcoin chart and you get a little more worried, you're like, holy cow, that was a massive dump. And it was, it totally was. But with an index, it kind of protects yourself. It doesn't necessarily protect yourself from the downside. Obviously, you're investing in all of these cryptos. Some of them fall more than others, but in my opinion, this is a good way to sort of hedge yourself in the medium to long term, especially. So, and then a company like Coinbase, they only accept certain digital assets onto their platform, and so they do their own research, right? They are actively looking into all of these companies. They're probably looking into GitHub pushes. They're probably looking into different market acceptance for different coins. They're looking into the everything, the management teams, etc. So something like Coinbase, they do a lot of the research for you. And you don't necessarily have to copy this exactly, but it gives you an idea of how they work. And I think this is a really good way to sort of craft a portfolio in crypto if you really don't have the time or you don't have the knowledge to do your own due diligence on each individual coin. I think this is an interesting way to play the markets, and just kind of, if you have zero point 0.1 Bitcoin, you can still craft exactly the same composition with these allocations, right? So that's something that I'm definitely interested in. I'll probably make another video about sort of crafting a portfolio based on backtesting. So that's something you can do in TradingView. You can get these different backtesting scripts, and you can do it all manually. There's definitely a lot of companies out there that will, you just input the coins that you want. You can backtest the returns based on certain time frames, and I think that'll be really interesting. That'll be an interesting video. So I'll plan to do that in the upcoming, I guess, couple weeks or so, while I gather that data. So with that said, we're definitely nearing an end to this sort of long-term downtrend, in my opinion. I mean, we could go a little bit lower. We could go down to the 4K range. We could go down to the 3K range, or we could bounce out, and we did form our triple bottom here. So that's anyone's guess. So with that said, I think this is probably a good time to be looking into sort of crafting your portfolio for the upcoming years. So something to keep in mind is these indexes rebalance their portfolios pretty often. And that's something not a lot of people talk about, is with their portfolios, they kind of just let them ride, especially if you're a long-term holder. A lot of this channel has been kind of based around trading, but crafting a long-term portfolio for holding, especially if you're going sort of the index kind of copycat composition sort of portfolio, you definitely need to make sure, if not monthly, maybe quarterly, to reallocate your portfolio. Say your portfolio Bitcoin outpaces the rest of your portfolio, you're going to want to recompose your portfolio with, maybe selling off some Bitcoin into Ethereum, selling off some Ethereum into Litecoin, to keep these current, allocations, to make sure that you're not getting overextended. And that's the most important thing with an index fund, is you can get really overextended if you don't ever rebalance your portfolio. And that's something that everybody knows in the stock market, but it seems like nobody talks about in the crypto market. So rebalancing is extremely important. If you have a 401k and you're not rebalancing your portfolio, you're killing yourself in the long term. So that's something I just wanted to bring up briefly. The last couple things I want to talk about is this guy, the $1 trillion wallet. So BitGo's plan to secure the biggest Bitcoin fortunes. This is really interesting. So in 2013, BitGo launched their sort of custodial fund, right? And they were holding about $10 million worth of cryptocurrency. In 2015, it was 100 million. Stakes were big. And then now they're looking for kind of the next wave, the next sort of bit of growth. And we've talked about this in the past with everything becoming securitized. BitGo is saying that they're looking to beef up their security to handle up to $1 trillion in digital assets, which is really interesting. It's really big news. It's good. It's good news. And that just means that big companies, big people are looking at crypto for the long term. And so, don't get too discouraged with this bear market kind of lingering around a little longer than everybody expected. So with that said, I will catch you guys in the next video. Have a good rest of your weekend, and take it easy.